Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/onthetape.
Hey, this is Nathan. You're listening to the podcast version of Trading Spaces. It's a live Q&A that I do with my On the Tape co-host Guy Adami every Monday and Wednesday at 1 p.m. Eastern on Twitter Spaces. We hope you enjoyed this episode, and thanks as always to our presenting sponsor, CME Group. All right, Guy, let's break it down here, man. We got 30 minutes to talk to markets. I was just singing a little offline, the boss's version of Santa Claus is coming to town. It goes like this: Santa Claus is coming, like you got that like kind of deep raspy sort of thing. And I'm doing that because I'm trying to get you all fired up. You hate things. You hate terms like the Santa Claus rally in the market. Well, it's on, dude. It is happening here.
I don't care. I mean, it might be on. I mean, it's great. Ho, ho, ho. I mean, I know people,
But
it's such a stupid thing. It's so dumb when they all use the term. I will tell you, and I think I have never uttered that phrase in my life, nor will I. And you can't bait me into doing it. And
all
I'm
right,
sure
well, what does
people
it
out there
mean, though?
that are nodding in accord because they know I'm right. And they get as pissed off as I get because it's stupid.
It is stupid, but here we are. Whether it's real or not, the S&P 500 is up, 75 basis points up, a little less than 1%. We had that big bounce on yesterday. We had the big reversal the day before that here. We're probably less than 2% from an all-time high. You've said this on many occasions. If you think about, where we bottomed out, with the Delta variant concerns, that sort of thing, this Omicron thing really hasn't been a big deal, except, and this is the most important point about this, is that the Delta variant in the summer, it just destroyed Q3 GDP, right? And now we're starting to see that literally this Omicron, which came about right around Thanksgiving or that week of,
Friday after it was first you heard of it.
Yeah, and it's doing a number on Q4 GDP. So I guess my concern would be, what do we do here? Because growth expectations are coming down. These are not the sort of things that you're going to get back, right? And so, are we going to continue to see the market have like 5% palpitations to the downside when a new variant comes, and then we just make new highs?
Listen, great question, great point. And I understand that Friday after Thanksgiving, the move in the market was all based on that variant, the one you just talked about. And I understand to a certain extent that's been true to the downside since. With that said, something I feel strongly about, what we're tasked to do is talk about the market and what the market's going to do. So you take the human element out of it. And what I've said and what I continue to believe is the market has learned how to deal with all the different variants. And I believe that, and I will continue to believe it. I think the move lower this week, there were some headlines that were scary. Obviously, I think one of the big reasons to move lower was this Build Back Better got shelved. I think people don't talk about that enough. But what I've mentioned, Dan, and I know you know because you pay attention, cheapest thing you can do, the S&P 500 traded down to 45.30. I've mentioned that a number of times. That was a prior all-time high. Prior resistance becomes support. And I actually said on Monday that you're probably going to see this thing bounce the rest of the week. So I'm wrong most of the time. We've been right about that one. Number two, the IWM held and protected that 210 support level, and the XRT did the same with its support level, I think around 83 or 84. Number three, Tesla, which I had been saying for a while, would trade down and test the prior all-time high made in February of $900.33. Well, guess where it traded down to this week, Dan? You know it. I know it. $900. And look where it is now. The VIX on Monday, which was, trading north of 25, and we talked about it, I think, on Spaces. I said, one thing you want to watch is the VIX the rest of the day. If it closes below 24, that's going to be a good sign. Well, that happened. So all this stuff is taking place as we speak, and I continue to believe it will. Now, I will leave you on this note, not that I'm going anywhere, but look at the airlines. They all topped out when the news for the vaccines and the news about the virus was at its zenith, at its best. back in April. That's when the airlines topped out. Well, look what's been happening in airlines when the news is theoretically now back at its worst. They've all been trading really, really well since Monday. And oh, by the way, and I've been now, this is a diatribe, not a conversation. The Hope Trade Expedia, look what that stock has done over the last couple of days. Back to you.
Yeah, no, good stuff, man. It's funny. Pull up the United chart, you all, as they say. Look at that low from the first day in February, and you attach it to the low in early December. You attach it to the low on Monday, and man, oh man, I mean, that is technical support right down there, right? And that would be your kind of stop level, because if you back that chart out a little bit, you know, you see that, even if it has support down at 39 in the throes of the pandemic, the stock got as low as, $18 or something like that. So that's one of the reasons why, here in trading spaces, we like to look at charts despite it being an audio medium. I listen, the move in Expedia yesterday was pretty extraordinary. Everything that is associated with like a sort of reopening trade. I think earlier in the week, we saw Carnival Cruise said they're hoping to get back to profitability, which is pretty astounding when you think about, that was forced unprofitability. Very sad for them. I know that you've said on many occasions they couldn't pay you. You couldn't pay you and give you a first class
Yeah.
ticket on a cruise line to go on one of those things.
If I want to get nauseous, I'll go to Disney World. I mean, at least I'll be on terra firma.
Yeah.
But back to you.
Yeah,
please.
no. But then Live Nation seemed one to me that when that thing gets back towards 105 or something is a bit of a layup, because if you think about all the issues as it relates to supply chains and access to product, especially around the holiday season. I mean, one of the things that Live Nation does is they sell the future, right? They sell future experiences, that sort of thing. So that one seems to have
And I know, like, I'm looking forward because I know you're a big fan. Like, I can't wait till Green Day comes out. And what's that other thing? You like Rage Against the Machine?
No,
And
I don't like Rage Against the Machine. I
right.
don't at all. But Green Day will be touring this summer, and I have tickets. I have tickets for. Listen, you want to know? I'm going to see the Chili Peppers this summer at Giant Stadium. I'm going to see the Strokes. I'm going to see Green Day. I got everything. I got everything. Eddie Vedder in February. Hopefully that still happens here. All right, guys, let's make.
Wait, is that Eddie by himself, or is he touring with his
Eddie?
band?
Well, he will be touring with Pearl Jam, but Eddie Vedder is going to be at the Beacon Theater February 3rd and February 4th. So hopefully that doesn't get canceled. Right. That's a Thursday and a Friday. Let's talk about the bounce in crude oil here, guys. 72. We got as low. What did we get down to last week on this Omicron stuff here? And this seems to be obviously a barometer for, the potential for lockdowns.
Yeah, well, I mean, look at what's going on. I mean, I don't want to get in the weeds here because what's today? Wednesday. And we're, ho, 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 and all that stuff, as you mentioned. But look at the move, and some of these nat gas moves. The energy move in Western Europe is staggering. I mean, there are a lot of things that lead me to believe, and I know we talk about this all the time, but obviously, this is going to slow growth, what we're going through. But prices are going to remain, I think, sticky and elevated, which that's why the Fed is facing a huge problem. They're going to hike into a slowdown, and that's really problematic. And I think that's what the market is going to take into consideration early next year. Right now, we're sort of in this euphoria for whatever reason. It's probably a money flow thing, year-end thing, whatever. But that's where we are. In terms of energy, look, I was wrong. I thought we'd see $100 crude by the end of the year. I think we got to, 81? That obviously didn't come to fruition. But I still think there's a couple chapters left in this.
You want a hot take here, Guy? You want a hot take?
That wouldn't people that have like.
They call it a hot take. All right, so I'm going to tell you this: crude oil may never trade $100 a barrel in your lifetime.
I like the never.
May never, ever trade $100 in oil again in your lifetime. How's that? And I will tell you, on a near-term basis, that 75, 76 level, it was the high from the summer before it had that 21. This is in crude oil, had that 2% peak to trough declines, the lows in August, and then obviously had that huge ramp. When it broke 75 on that day after Thanksgiving, when this variant fear that was a massive move. I can't remember. What did it go? It went from like 77 to it was down easily 10% that day. So near term, let's see if we can get through like $74 or something like that. I don't know, man. I feel like it's $72, Guy. Would you say 77 before 67?
I would, but listen, you mentioned not in my lifetime. At my age, it's not saying a whole hell of a lot, but noted. And you know what I love? We have some dude named, or maybe it's not a dude, I don't know, but somebody called Crypto Billionaires following us. I mean, wow. I mean, that's like, it's not,
Dude, there's a lot of
what
crypto
do they call
billionaires
that?
out there.
What do they call that when you have like a burner account? That might be BK.
They call it having a burner account. Hey, by the way, we launched a new podcast today. Amanda Diaz, who works with us, has been working really, really hard on this. It's called OK Computer. Follow OK Computer in the podcast stores. Follow it on Twitter. It's OKAY Computer Pod at OK.
And that's a play on that Nirvana song.
It's not Nirvana. It's a play on the 1997 album by Radiohead called OK Computer, but it's just OK. We have an amazing group of co-hosts: Rick Heitzman of First Mark Capital, Katie Stanton of Moxie Ventures, Packy McCormick of Not Boring Newsletter and Capital, and then Meltem Demers from CoinShares, and Jared Dicker of the Chernin Group, and Cleo Abrams, who's a superstar. Yeah, we got Cleo and Sally Shin of United Masters. So we have this amazing group of voices. So check out OK Computer. Follow it in the podcast stores. Follow it. You're going to get a new episode dropping today. It's going to be amazing. All right, Guy, let's talk.
By the way, hold on. Before, and since you're talking about podcasts, we are also do the On the Tape podcast, also sponsored by CME Group. I mentioned that because if you have any burning questions you would like to ask Dan Nathan, Danny Moses, or yours truly, submit them via Twitter or whatever. How do we submit them, Dan?
You can actually email them. Amanda will get them at contact@riskreversal.com. And we're going to do a mailbag this week. Guy and Danny Moses and I are going to talk markets, but then rather than having a guest on this week, we're going to answer some viewer or listener questions. So please give it to us. We've had a heck of a year, Guy, haven't we?
Well, I mean, they could be viewers of the different, we do things on the video as well. So
yeah, we do the market call.
Viewers,
the market call is amazing.
Lovers, whatever, that whole thing.
Yeah, talking to the mic. All right, Guy.
I am talking. The other day you made me use these things where you shove them in your ears. By the way,
headphones.
How do they stay in your freaking ears?
You know what happens is
it's so stupid.
You're not going to like this, but the heat that's generated within your earlobe, it should bind a little bit to it keeps them in there.
Is that what those Apple geniuses came up with? By the way, everybody thinks Apple's, they're great for society. I would submit, Dan, that one of the worst things that ever happened to the human race is Apple and their products. Back to you.
Really? Because you're sitting there using an Apple iPhone. You're staring at an Apple iMac.
I'm not happy about it. I'm not happy about it.
Well, what else would you be doing right now? That's what I don't understand.
Reading, guess what? There's been some great books written through the course of history where you can actually pick up a physical book and sit down, put your ass in a chair and read. Go figure. And for a long time, that's what people did by whale oil. Oddly enough, they read Moby Dick by whale oil.
All right.
Think about the irony.
I'm gonna do this for everybody. Okay, Boomer. All right, let's talk about mega cap tech here, because what's interesting is that you have the S&P, like I said, it's up, 75 basis points. You have Apple up nearly 1%. You have Microsoft up 1%. You have Amazon, which is underperforming. You have Google up 1.6%. The Facebook is down 1.6%. But the big ones, the big guys, and Tesla, Tesla up 6%. That is a meaningful contributor to the S&P 500 performance here. What do you make of this thing as we head into year end? Will we see these huge components of the S&P and the NASDAQ 100, which have massively outperformed? Will we see them close next week at their tippy tops, at the very highs?
Well, not Amazon. I don't think Apple, but I think there's some names that can. I don't think Tesla will either. But I'm not trying to dodge your question, but I do think they're going to continue to sort of ratchet higher, and you're definitely going to see whatever they call it, painting the tape, as we get closer to the end of the year next week. So the answer is yes, because I just don't know what the news cycle, unless I'm totally missing something, because, we've pretty much hit rock bottom in terms of some of the news on the variant. I can't believe that there's many worse news that's going to knock this thing down. So look, I said it on Monday. I'll say it again. It's not that I'm some raging bull. I'm not, because I think the beginning of next year is going to be extraordinarily challenging. But I think until then, this thing is going to continue to grind higher.
Fair enough. I have the variant. I have a little bit of a head cold right now. But here's one of the things that I think is interesting about this guy. A year ago, the lengths in which our society and other societies went from people getting it. This is before, vaccine distribution, was pretty tremendous. And now it's just interesting to be in New York City and looking around. People are really, there's tourists in New York City. Restaurants are open. I have a bunch of friends who went to a Knicks game last night. Broadway's open. It's just kind of interesting the comfortability that we have now that if you're vaxxed and you're boosted and all that sort of stuff. I think the fear of getting very, very sick or dying is kind of gone. And I think that's the best news for 2022 as we think about getting back to kind of a normal routine in a way, is that we're going to, like, how we go into flu season and usually there's a big campaign, get your flu shot. Your doctor asks you, did you get your flu shot? Your office or your place of work might encourage you to get a flu shot. Is that where we're going with this
Maybe.
thing? And are we right about to turn the corner, do you think? And this is just really purely anecdotal. The stock market, at least through the lens of the economy, is kind of saying that, like, yes, there's going to be a hit to Q4 GDP, but we're okay with it right now.
Well, if you think, if the stocks are telling a story, as I mentioned, airline stocks topped at the pinnacle of the good news, and they're seemingly bottoming now and turning the other way as we get the worst news. So it's just something to consider. The stock market typically at times can get these things right. I think you're onto something. And again, I don't want to even get near the fact of play a doctor or any of those things. But what I'll tell you, there are people that believe that, this might create the immunity that we're waiting for in terms of getting things restarted. I have no idea, but that school of thought is out there. And if in fact that is the case, then the Fed is probably, look, I think they're right anyway, but they're right to try to get ahead of this inflation thing because that's going to continue to grind higher. And who knows about growth? So we'll see.
Yeah. Are there anything, I just did a Fidelity. I do my weekly in the money Fidelity
Call
hit.
them Fido.
Fido, and it comes out Fido, and it'll drop right after the close. But I did an options trade idea. I just want to kind of preview. Here's a name that I find really interesting, and on the video we kind of talk about how to play it. So check that out. Look at Chegg here, and the reason I'm bringing this up is like, look at Peloton down 6%, right? And so we were calling this like a Niedermeyer market, right? Work from home, Zoom dead. Work out from home, Peloton dead. School from home, Chegg dead. Teledoc, telemedicine from home dead, right? All those stocks were down at least 50, 60% from their 2021 highs or so, or from the all-time highs made in the last year. Chegg is really interesting to me, and I'm going to tell you
like
why.
$116 stock.
Yes,
like 29 or something.
Remember last month when it had that day where it was
Yeah.
down 50% in one day? They guided Q4 down. Well, here's the thing, Guy. I'm just like looking at some of these names, and I don't feel ready for Peloton just yet, and I don't feel ready for Zoom just yet, although I've been on 4 Zooms already today. But Chegg is really interesting to me because it's a $4.5 billion enterprise value. Expectations for earnings and sales are to be growing at least 10%-ish next year. It trades at 25 times earnings, about 5 times sales. And to me, this one run by Dan Rosenzweig. He's ex Yahoo COO, really smart guy by all accounts. I think there's opportunities in some like names like this. What they're dealing with decelerating expectations. It's not that the company misguided and like didn't see the visibility. It's obviously they're trying to deal with a very difficult and uncertain environment. Are you starting to focus on some names like that? Starting to look at some names like that as you think about what your acronym is going to be for 2022?
I will one up you there and say that if you look at where Chegg just traded down to, it's eerily reminiscent, and perhaps Amanda Diaz can throw this chart up. Look at where we traded down to in the throes of the first pandemic in March of 2020. I believe it got down to about that 28 or so level. So I'm with you. I think you have a chance for a trade here. I think it looks really interesting. And I do think they're going to be some of those names. Now, look, I think Teledoc, people have pointed out that, maybe it's not as much the environment, it's maybe the business model is a bit flawed. But I think Zoom is worth a look for sure. I think they've taken enough out of it where you can take another look at it. The business is not going away. The growth might be.
When I look at Chegg and I look at that gap, that 50% gap on November 1st, and I look at and see where the stock was trading a year ago, and I look at 40 as the level the stock gapped down to, all right, on that day, and obviously went lower. It went down to 24. But I look at, okay, your first move on the slightest bit of good news, guy, is back to 40. And then, listen, this could be like a takeover candidate, in my opinion. I don't know what like the strategic acquirer is. Maybe it's private equity or something. I don't know. But then you get back to filling in that gap. You know what I mean? So I have a trade idea using the options. You love trading the options. You had a funny thing last night, man, on Fast Money, where Mel came to you after Mike Coco Beware's take, and I can't remember what the stock was he was focused on. And you said, well, Mel, that's why I watch this show every Friday at 5:30. And you gave like a wink. You gave like a killer wink. And I got to tell you, for all those people who want to banish you to audio like formats like this because they say you got a face for radio, I think
People
you're
say
still,
that.
yeah, they do a
That?
lot. I mean, Amanda will tell you that she's got tons of mail that says, yeah, you're still really
You know
good
what?
at,
She
you're
hasn't
still
said
really
that
good
to
at the
me.
TV.
She hasn't said that to me. She's protecting me. By the way, it was Black Rock, not Black Stone. That was the OA that Coco Beware did last night. We had a very interesting conversation. I appreciate you pointing that out. And by the way, I know, Dan, you don't want to go down this road, but News by Nick, who's like I think he's a high school kid. How are you, News by Nick? He actually said on the Twitter, in terms of those, what do they call those things you put in your ears? Again, the
Call them
ear pods.
earphones.
He said that he rarely uses his because they don't stay in his ear. And he's worried that they're going to fall out and he won't notice it if he loses it, which is a problem, I guess, because they're expensive. Are they expensive? If
The
you're, let
new
me tell you something, people, if you're spending more than like $10 on these things, you're out of your freaking mind.
They're $250
Yeah,
for
well,
the
that's
high
just,
end ones.
I mean, and you wonder, again, I mean, what are the margins on those things you figure? Probably 80%. And you wonder why
$50
Apple
billion a year business, I think, or something like that, which
madness.
is astounding.
Sorry. I know you want to talk other things.
Yeah, but so the one thing I'm going to tell you, Guy, is just because you're a Luddite, I mean, the fact that like millions and millions of
proud of it.
Millions and millions of people around the world are getting a lot of value out of them, which is why they buy them.
Yeah.
You know, it's pretty simple, buddy.
And so you have an entire species on this planet that walks aimlessly around with things in their ears talking to themselves. And
Yeah, but you know what? You know what's funny? In a couple of years, you're going to be walking around aimlessly talking to yourself too.
Yeah,
and,
for
and
different
you better
reasons.
And you better
for
hope that
reasons.
we're a bit more sympathetic to you,
right.
bro.
And I'll have a name tag on, and it'll say like, if found, please return to my whatever my address
Hey,
is.
can I ask you a question?
Yeah,
This is an honest question.
It's interesting. That's a grammar thing. So, and I'm not trying to play the grammar police
you
here.
Are. You
of course you can. You're able to. So
may I ask you a question? May I ask you a question?
Yes.
So I went to an AMC theater the other night in my neighborhood to see the Spider-Man movie, and I will tell you that over the pandemic, when this thing became a meme stock, they upgraded the shit out of this theater. It's on It's on 19th and 6th Avenue. Okay. Not only did they make it sleeker, they put a bar in there, which is pretty kind of cool. And then they also put in like some really nice seats, comfortable seats with like heaters and that experience is much better than it was a couple years ago. And I don't know if you saw the numbers for this Spider-Man movie because there's a lot of people like Rich Greenfield's a friend of ours.
Can I? Before you're going to go into the weeds here, which is fine. How many of these dumbass movies have they made now?
There's been like 24 Marvel movies, 24.
Brutal.
Yeah.
I mean, and sometimes you have Spider-Man like in a movie with other superheroes, right? And then other times
it's called the Avengers. It's called the Avengers. Yeah.
That's all under the same umbrella, right?
Yeah,
and
Marvel.
Things. The same people that I would imagine went to see all the Lord of the Rings movies, which are all exactly the same, by the way, as are the Harry Potter movies, which are basically the same three kids running around in a forest with wands. The difference is Dumbledore shows up different times and they get older. That's, as far as I can tell, that's the only difference. And the guy from Die Hard winds up being a good guy, not a bad guy.
Oh, Hans Gruber. He honestly, I watched Die Hard with my 16-year-old daughter there, and Die Hard's just such a great movie. It's just such a great movie.
No, but that's the dude, right?
Hans Gruber. He died a few years ago. He was a great actor.
Great actor. He was also in the movie, I think, the wine movie, Sideways or something.
Never saw it. I never saw it. I saw you tweeting about wine this morning. That was very, as Amanda would say, bougie. It was very bougie of you.
Sal Arnuk said something about he bought a bunch of bags of tater tots, and I asked him what time the 7-year-old birthday party was, and if he got a piñata, And he said, actually, you can pair them with a nice bottle of crude Cabernet. So I took a picture of crude Cabernet, which I happen to be.
Because you don't really drink anymore. Will you start distributing? You have a really nice wine collection. I'd love to be the recipient of some of that. All right. Well, real quickly though, Guy, I was going to say to you about, listen, that narrative that no one's ever going back to the movies. I mean, Spider-Man did $257 million this weekend in North America, which is massive, right? And so there's certain movies that will come back. I wanted to ask you about Disney, though, Guy.
Narrative isn't people go to the movies. People were going to the movies 5 years ago, and the stock was mired. The six. I mean, it's the business model is broken. Doesn't mean that people aren't going to the movies. I mean, a lot. Listen, people go to restaurants when the world was good. Doesn't mean the restaurants are profitable. I mean, there are a lot of restaurants that are packed that don't make money. Same thing with AMC. I mean, I'm not suggesting people are never going to go back. I'm sure when Top Gun comes out, I will go to the movie theater to watch it. But it doesn't mean it's a profitable business venture. Back to you.
Fair enough. Okay. Well, I'll just tell you this is that, the AMC, it bounced off that $20 level or whatever. And it's hanging in there a little bit. It had a huge run. It's down a lot today, 7% or something like that. The Disney one, I want to give you a little credit. I know. And you said when the stock was 180, you thought it's worth 135. You said that. I thought you were a bit nuts. Stock got as low as 140. Where did it get as low?
142.
142.04, Guy, on December 1st. Do you want to? You're not still playing for 135.
No. I actually said on the show that you might have seen. I talked about it on the show a couple weeks ago. It had a reversal off that lever. I think I said, look, I thought 135, but you just saw a pretty meaningful reversal on decent volume. I think the short-term bottom's in. You can trade around it, and that's proven to be correct. Listen, it's all about being fluid. You know what I'm saying? You can't be, what's the word I always use, Dan? Dogmatic in your views.
That's a fact, Jack. We had a great call. I think you're a little too hard on yourself, Guy. You say you're wrong all the time, and we're all wrong a bunch. Well, all right. So yesterday you talked about Alibaba. You see these Chinese internet. They're absolutely they. It's just amazing how badly they act, Guy. I mean, like there's no bid. Do U.S. investors think that they're just going to be delisted? Is that part of it here? Because
you talked about that. That's the Dan Nathan. I mean,
no, I know. It's like when I see a company like that is so leveraged to this like middle class and e-commerce in China, a place where they have $1.3 billion. I say to myself, oh my goodness. I mean, the stock was trading 265, in February, and here it is at 117 or 118. And we know this is like, I get it. I mean, there's some people out there who got conspiracy theories that this, that, or whatever, but this stock 2 years from now is going to be higher than where it is. That's just a fact.
I agree with that. By the way, if you're one of those people, and I know there's some of you out there that do this, stop doing it. If you're one of those people that say, if I say to myself, and then you say self, don't do that. It's dumb. Back to
all right. Ivan the K just tweeted at us, and I love Ivan. I love the guy. I'd love to meet him IRL someday. He just said, Guy is impervious to being dogmatic.
He knows my buzzwords, man. I love Ivan the Q.
I love that.
Listen, so you know, I mean, listen, first of all, I think that's hysterical. But I tell you what, go on media every day for 15 frickin' years. You're gonna have words you use a lot. And I'm one of the, everybody does it there, Ivan the Q. And you're laughing, I know, because it's funny. It is funny.
You know what? Hey, Ivan the K. I responded to one of your tweets the other day. I don't know if you responded. Maybe I'm not seeing my mentions, but you had one of your very witty quips, and I said "bum," and I know you know where that's coming from. I know you, and I feel like that should have gotten a little more run. It didn't. It's fine. All right, Guy, we got like 2 more minutes here. You've been all over the resource trade.
By the way, I'm going to say something real quick. This is piss people off. I'm sure there are a lot of people that are upset that the players from the NHL are not playing the Olympics. I am not one of them. I think you'll never get another miracle on ice with NHL players playing for their respective countries. I actually think this is a good thing. Resource trade, please. Alcoa. Everybody laughed at me about Alcoa.
They did. I laughed at you.
You see where Alcoa's been over the last week and a half, 2 weeks? I mean, it's crazy. We talked markets. We talked hockey. We talked New York Giants draft. We talked people that say,
where's Chris Moore when we need him? Where's Chris Moore when we need him?
Chris Moore might be on air, actually. If he is, that's great.
Okay,
We should have taken a couple questions today because today's a good day for it. But if you do have questions for us, send them to where are we sending them, Dan?
Contact at Risk Reversal or tweet them to us at what is this called? On the Tape Pod. Amanda Diaz. We'll get them all together. We will have a nice conversation with Danny Moses. We're going to do that tomorrow. It will drop in the podcast stores on Friday. So a couple announcements, okay? Guy and I on Thursday, we do a market call. It's live. It's hosted by Open Exchange TV. It's on our Twitters. Amanda tweets it out. You can follow it at MKT Call. You can follow it on our Twitter handles. So check that out tomorrow at 11. We have Liz Young of SoFi. She joins us each week. Carter Braxton Worth of Worth Charting will be on with us. We're going to do a little year-end wrap and a little look ahead on 2022. So that'll be live tomorrow at 11 a.m. We also have OK Computer dropping today. It's our inaugural episode of a podcast. So check that out at OK Computer Pod. That's sponsored by Current. That is a neobank. It's not a bank. It's a fintech company, Guy Adami. So check that out.
I learned all about it.
You did. We got an amazing group of contributors and co-hosts, and that's going to be all things technology, public and private markets. Check that out. And then on Friday, we have On the Tape podcast that drops in the podcast stores, sponsored by CME Group. They're also the sponsor of our trading spaces that we do every Monday and Wednesday at 1 p.m. Eastern. That's what we just did here. And those will go on the podcast feed. So we got a lot of content. We're really enjoying doing it. We really appreciate you guys being with us on this journey in 2021. We got a lot more to come.
By the way, and that OK Computer, I tell you what, I mean, that is a great album by Radiohead. It's one of my favorites. I have it in my collection, Dan. It's.
Are you being serious, Guy?
Of course not. I couldn't tell you a Radiohead song from. I know Radio Free Europe, which is a great REM song for you. By the way, REM's the last new band that I like. Also, I want to thank Paul, who just jumped in. Paul sent me a 1967 GTO. He was not able to send me the actual one, but he sent me, as they call it, a replica. So I want to thank Paul for that. He's just a kind man, a classmate, a friend, and he's also dashingly good looking. By the way, for you folks out there, just wanted to let you know.
All right, not unlike you, Guy Adami, dashingly good looking. Well, thanks for everyone for being here. Check it out. If you came in late, this will be in the podcast store. It's kind of a fun one. We had fun, Guy. It was great to be here with you, Amanda. Thanks for the job on the charts at our @_Trading Spaces podcast feed or Twitter feed, whatever you want to call it. So thanks, guys. We'll talk to you later.
5,000.
Audi 5,000. See you, brother. Bye. Thanks for listening to this episode of Trading Spaces, brought to you by CME Group. If you like what you heard, follow us on Twitter @_Trading Spaces and join our Twitter Spaces every Monday and Wednesday live at 1 p.m. Eastern. You can also follow On the Tape in your favorite podcast store for new episodes every week.